company joins us. Hi, Mr. Kejriwal. Good morning. 1,300 crores is what you've got. You've given us, the qualitative details that you've got it for a Brazilian subsidy. That's the T&D business, the railway business as well for Chennai as well as Mumbai Metro, and the cables business. Break this 1,300 crore order up for us into these three segments. And what's the margin differential?
So, Nigel, good morning. Broadly, if you look at it, it's around 60% is from the T&D sector, and it's largely the Brazil order. And around 35% is from the railways, and the balance is cables. I think the good part on this is that, our Brazil, and you talked about our numbers not being great. So one of the reasons had been the Brazil subsidiary, and this order will really help us in, turning around the subsidiary. And as far as the railways are concerned, the first order which we have got from Mumbai Metro. So I think that's the significance of this order.
So can you give us a timeline in terms of execution, and would you have to raise any kind of capital for execution of this project?
No, Sonia, we will not be raising any capital for this. And timeline, the execution will start next year onwards for all the three orders.
Mr. Kejriwal, good morning, Prashant here. You've raised your 23 revenue guidance upwards, right?
Yes.
It was 15% earlier, and now it stands at 20%. But what do you think margins will be like for the full year and beyond? Because that's where a bulk of the concern really is.
So, Prashant, you're right. We raised our margin in the last investor call from 15 to 20% on the back of the order intake. We
Revenue, you mean?
Yeah, I'm saying that on the back of the large orders which we got.
Yeah.
So we have an order book plus L1 of 34,000, which made us raise our revenue guidance.
Okay.
As far as the margins are concerned, we actually have three headwinds in the margins. One is on the raw material price, second is on the freight cost, and third is on the Brazil. So raw material and freight are coming down. Brazil also should get over by this quarter. So hopefully from Q4 onwards, we will start seeing an uptick. As far as the numbers are concerned, we have not given any specific number for the year. I don't think we'll see a major improvement in the margins for the year. It will start from Q4, but from next year onwards, FY24, we expect the margins, to get back to normal.
So, Mr. Kejriwal, from Q1 FY24, by the current reckoning, you're saying that margins go back to double digits? Is it fair to assume?
I don't know whether it will go back to double, but at least it will be definitely maybe closer to 8 or 9 or somewhere in the range between 8 to 10%.
I just wanted to ask you on this growth guidance that you've raised to around 20%. So you'll end the year with the number of close to around 16,500 crores in terms of revenues?
Absolutely.
Okay,
absolutely.
And I just break that up for us because the two big contributors are the civil business and railway business. Now, railways, you've been guiding, I think, for around 3,500 to 4,000 crores. Could you tell us what do you end the year up? And for civil, you were saying it will double. So close to around 4,000 crores from there as well?
Yeah, broadly, the numbers are right. I think we'll do around 7,000 and odd in transmission and 4,000 each broadly in railways and civil. And then we'll have cables of 1,500, 1,400. So these are broad numbers, and then we'll have oil and gas at close to 500 crores or something. That would be the broad number.
Okay, I want to get back to what's happening with the Brazil subsidiary, because you said these orders will help you sort of turn it around. Are you looking at any kind of timeline on when the Brazil subsidiary will turn into the black?
So, Sonia, our problems has been with a couple of EPC orders which we had. And these EPC orders are all, only one is now left out, which is now almost virtually physically complete, about to be commissioned in maybe this month or early next month. So by the end of Q3, we'll be out of all our legacy orders. So that's why we are saying that. And then the second part is that, right now we do not have any EPC orders. All the orders are now for supply of, towers and hardware, etc., which are generally profitable. So expectation is that from Q4 onwards, we will definitely have an operating profit in Brazil, and maybe in the year after, in FY24, we should start having a positive PBT also.
So by Q4 FY23, you're saying you'll get back to operating profit in Brazil?
Definitely, yes.
Okay.
All right. Mr. Kejriwal, just on that margin point, you said margin should be around 8% or so, right, in 24. But that is as things stand right now. Do you foresee enough levers to kind of push that higher, as you go forward? And what would those be really? I mean, if you were to list it out right now.
So to me, levers would be, let's say one is the commodity prices. If they continue to remain, let's say, benign as they are today. Last week we did see some spike happening, but generally we expect, so if commodity prices go a little bit lower or something, that's number one. Number two is how quickly can we fast track the execution of the current orders? That's the second one. And third is, on the legacy orders where we have lost money, etc., we are in touch with customers, is saying that they're force majeure, the raw material cost went up and all that. Can we get something? And I think the last one, which is not on the margin but on the PBT, is on the interest cost. We do expect that our working capitals will start becoming normalized and better. So at the PBT level, the interest cost should also start coming down.
Since you spoke about interest costs, what is the current debt in your books and the working capital days? What is it likely to be going ahead?
So net debt is around 3,000 and odd crores, plus we have what we call bill discounting, etc. So it's roughly just below 6,000 crores is the total interest-bearing debt which we have.
Okay. And where does that number go since you're ramping up? Do you see it stabilizing out here? Do you see it coming down? And also give us a sense on the working capital days.
So what we are expecting is that the working capital will come down. There will be a need for extra working capital in terms of the ramping up which we are seeing. But our expectation is that we will be able to have a lot more efficiency in the working capital. So despite the revenue increase, we expect the debt to come down by around 500 crores by March end.
Okay, all the best, Mr. Kejriwal. It's always great speaking to you. Get to learn so much about both the industry and the business. All the best for the second half of the year.
Thank you for having me. Thank you.
Okay.